Eric Mother with Mother.com, going into the weekend of February 28th and March 1st, 2015. Let's take a look at how markets closed on Friday. We see that markets were slightly down. The Dow was down 0.45, Nasdaq was down 0.49, S&P 500 was down 0.30. We see that crude oil was up about 2.47 and the VIX was down 4%. For the week, S&P 500 was down slightly, 0.28. For the week, the Dow was also, let's call it unchanged, down about 8 points, so that's nothing. An unchanged week for the Dow. We look at the Nasdaq, which was up slightly, about 0.15. Now, I have a theory as to why the market has somewhat come to a pause, or at least it is not gaining on a strong weekly pace, and the reason could be because of the weekly RSI. We've been talking about this line on the top side, and here is the Nasdaq Weekly connecting that high, this high, and now we've come back and we seem to be coming in contact with that same level. For this market to continue making new highs, it needs to be trading above that line. So this is where I think either the market can eventually show strength by breaking above that line, or as of right now, looks like it could be resistance pointing to a market that wants to pull back. Also, you can see the same type analysis if you take a look at the S&P 500 weekly. Take the top side of the weekly RSI. You can see that the market has been making higher highs in price, and yet we've been making lower lows on the RSI, and the same line is where we've been drawing this line, saying that the market needs to be above this line if it's going to do well. Otherwise, if this becomes confirmed resistance like it is starting to look like, it might suggest, more than likely, that we are due for a pullback. Now, one more point to note here is you can see that this negative divergence is coming as the market is making new highs there, and yet the RSI has failed to move above. So this most recent high has left the RSI showing resistance at about 61.8 on the weekly RSI. So this resistance, this is the worst type of negative divergence, and could suggest that more than likely, if the market cannot move above that declining RSI line, if the market cannot move above that, it suggests more than likely that we are looking at a market that is poised to go lower, because we are now seeing the worst type of negative divergence, which might suggest that we are due for a severe pullback. And so right now, if we take a look at the Nasdaq on a weekly chart, we can see that everybody's focusing on this 5,000 level, and we came about 10 points shy of the 5,000 level. Now, personally, I don't think it really makes a difference whether we trade above it or around it. I mean, really, I don't think it does make a lot of difference. What we need to just pay attention is to the resistance line, as discussed there, and also there's another line that corresponds to the highs on the Nasdaq going back. If you draw this line this way, we can see that it's been where the market has given us short-term highs. Even that was a short-term weekly high. We had uniform activity above that line, back below it, another short-term high. We had another movement above that blue line and back below it, which was this most recent high, and we've come back to the same level. So clearly it is either going to be resistance, or for the first time since 2014, we might be able to break out above that line, and I'm talking about those two lines actually. So the top side on the RSI is line number 1, and line number 2 is this line here. So the market needs to be above that, above those two lines, if it's going to be continuing to push higher. Now we can see that on the bottom side of the Nasdaq Weekly there is support on this line here on the RSI, and then on this top side there's resistance. So maybe eventually we might be able to move, either break out above that wedge or break down below that wedge for the next mega move in the market. And of course, we don't know which way the market is going to decide, so we're going to have to wait for all that to play out. If we take a look at the Nasdaq Daily, we can see that if you take the highs on the RSI like that, you can see that it comes in contact with exactly the high for this past week, which was, I believe, Thursday, and I think maybe Wednesday, but it comes in contact with that. So this is a reasonable area to expect a pullback, and we're starting to see that. We see the market is back trading below 69.10 on that daily time frame, so the market is below that threshold, and so remains to be seen whether this is going to be enough to bring it back much lower. It's the beginning, but I don't think the market is broken yet. Of course, that's just based on a couple of days of action, but curiously, the more we move away from that RSI resistance line here, the more it's going to have to push this price lower. And the reason why I say that is because if you take a look at the lows here, the lows came as the market held support. It took a couple of weeks to bounce on this level, but eventually that was enough to generate enough energy from here to eventually take the market to the current highs. So that resistance that was seen a couple of weeks ago at the lows here took a while, but eventually the indication was that if that line held, I'm talking about this line here, the market would go higher. So now I'm talking about the opposite scenario, that if this is confirmed resistance, which it's looking like, then maybe it is suggesting that the market is due for a pullback also. If we take a look at the Nasdaq Hourly, we can see that this most recent move from here to here began when the hourly RSI broke out here. So that breakout on the RSI coincides with that price entry, which was ideal entry point on hindsight. So we draw a simple straight line, something like that, and we can see that the market has come back to this general area once before here on the RSI and held, which was short-term entry level for a swing trade higher, and we are back to that general area. So hour to hour, the market could actually be coming back to a level of support. You can see here that the MACDs, at least one of them is below zero. If both MACDs drop below zero, then that is going to suggest that momentum is to the downside. Right now we only have one of the MACDs trading below zero, so it's kind of like not confirmed. So we need to watch to see whether both MACDs are going to eventually be trading below zero, indicating that even this support here might not hold. If you take a look at the Nasdaq 30-minute chart, and this one shows it very clearly, you can see there was a nice entrance off this level here. On hindsight, this was a nice place to go long. If you are lucky to have gone long the market and stocks at that point, you would have been at least able to have ridden part of that trade. And that entry comes from the RSI movement here. So when the RSI moved above that range there, you draw a simple line like that, and you can see that on the 30-minute chart, double bottom support, nice entries there. Recently the market came and touched that, which you can see that, but it was I think last Thursday, and the market bounced, and also we can see we've come back to that level. So on the 30-minute chart for the Nasdaq, we can see that the market is back to a critical level where it could actually be finding support, as it has been doing over the last couple of weeks. So here we can see a situation for another make or break. Recently the market has been using this to find support. Maybe for the first time in a while it might break that, but for now, since we closed exactly on the line, we're going to have to wait and see how the beginning of the week, the beginning of the month of March is going to be beginning, to see whether the market is either finding support or is going to be breaking that line. If we take a look at the Dow Weekly, we need to watch this level here at 18,053.71. As long as the Dow is above that level, that should be a breakout market, but if it moves back below that level, that's going to be a suspect market, indicating that the breakout is probably not going to hold. So as long as the market is above 1853.71, the market is good, but if it moves back below that threshold, then the market is probably setting up to go lower. And again, don't forget that we did make a fresh weekly closing high a week ago, but the RSI might be making a lower low, and the RSI is not, and I repeat, not above 61.8. So as the market was making higher weekly closing highs, and if it can't move above 61.8, this is going to be the worst type of negative divergence, which again could be indicating that we are due for a serious correction, pretty much for most sectors, and especially for markets here in the US. So we need to watch that, as if the Dow moves back below that 18,000 threshold and 53, expect a severe pullback in the coming weeks, in the coming months. If we take a look at the Dow Daily, we might start seeing signs of resistance. If you take the highs there on the daily RSI through that high and also through this high, draw a simple straight line, you can see that we've come here and we seem to be showing resistance. The last time we showed resistance, or at least displayed resistance, was during the most recent high that led to this pullback here. So I think this is an area where we can see that clearly the market is showing resistance, indicating from the daily chart on the Dow that it would make sense if the market pulls back in price and also in the RSI. The level to watch again is 18,053.71, which is the recent daily closing high for the Dow. Anything below that would confirm a failed breakout, which might be indicating that we are due for a pullback. But this chart by itself gives us a nice visual that this market is showing resistance. If this market is going to continue trading higher, it needs to be above that line. Right now it is below it. In fact, it is showing resistance. So we have to conclude that more than likely we are starting to see the market give us some visual cues as to what is next, and probably what is next is for a pullback. If you take a look at this line here on the Dow Daily, this red line, we also see that it gave us a reason to go short the market at this point, which was this high, and we had a strong correction there short term. We came back and broke below that red line here, which was during this break point. We had a pullback lower. We came and also had RSI resistance there, which was the high there before this pullback, and now we are coming here and we are showing resistance. Indication is more than likely we are setting to go lower, unless the market can be trading and find a way to trade above those two lines of resistance. So if the market can be trading and push above and trade in this general area, that's going to be bullish. For now, we are seeing resistance, indicating that more than likely this market wants to go down. A quick look at the Dow Hourly, and on the hourly we've been focusing on this line, which connects the highs on the RSI here through here and the most recent highs. And we draw that again. So the most recent highs have been with the markets making lower highs, so lower highs here, while markets were making higher highs in price. So that negative divergence, and again we see that the resistance here is taking place just around 61.8, indicating that this is probably setting to go lower. Now there's a line of support, which is this line here. As you can see, if the market can hold this line short term, then we are just trading within a wedge. Otherwise, if we break below that line, expect a pullback. If the market can eventually break out above that wedge, that's going to be very bullish. And so we are stuck in those two lines, topside resistance and downside support. Eventually we're going to get out of that wedge for the next directional move in the market. You can see here that on the hourly Market looks to be testing the zero line on the MACDs. If both markets are below zero, expect momentum to be to the downside. If you take a look also at the Dow 30-minute chart, so 30-minute on the Dow, there's a line of support here. And so the market most recently came here and held, which was this lows, and had a strong hourly snapback move higher. So now we can see that it is coming back to test the same line, and clearly if it can hold, then maybe there's a short-term reason for the market to have a good beginning of the month. Otherwise, if we break below that line, then that's when we're going to be setting up to go lower. If we take a look at the Dow transports this past week, they failed to hold above the prior weekly closing high. So the breakout failed there above, or attempting to move above 91.98.20. And as long as it's showing resistance, the indication there is that a failed breakout could be telling us that more than likely the market is running out of momentum and is poised to go lower, also based on that chart. We take a look at the daily for the transports, and we can see that ever since this break point on the daily there, which gave us this intraday high, the market had a pullback at that point. We come back to the same level, so let me draw that in red. So this level here, and again you can see that we came and touched that level with uniform action, which gave you that high, and another pullback. Did the same thing here, which was this high, and yet another pullback. So we've come here, we touched that level, and we are trying to see the sign of another pullback. So if we are to be neutral, then we can see that more than likely this is indicating that the next couple of swing trade directions are going to be down as far as the Dow transports are concerned. A quick look at the hourly for the Dow transports, and you can also see that just like the Dow itself, topside resistance there is the reason why it's come off the top there, because it came back to a line of declining resistance. You can see double top there, and since then it's down. Now curiously, we come back to a level where it's been finding support. Yep, the most recent low here came on the line, so if it can hold that line, the green line, then it could bounce. And I guess it's a little bit confusing, but you can see that this is where the market has been bouncing, and even you can see once it's reclaimed above the green line there, it had a nice push. Also once it's reclaimed above the green line there was a nice push, and even here it held, which was a nice low. So coming back to this level, if it can hold, then hour to hour, even the Dow transports could be setting up to go higher. As discussed earlier, S&P 500 is showing resistance on the weekly here. It needs to be above that line if it's going to be moving higher. It also needs to hold above 2088.77, which is the prior weekly closing high there. As long as it's holding above that, the market should be safe. But if we find ourselves trading underneath that threshold of 2088.77, and also if we see that this is confirmed resistance, we should be expecting to see markets really take a drop. Keep in mind, as of right now, we are making, or we did make fresh highs a week ago, but the RSI failed to move above 61.8. And again, that failure to move above 61.8 could be a problem, because if that holds, and if the market cannot break out above that declining RSI line, more than likely we are looking at a major correction at some point. Let's take a look at the S&P 500. On the daily, we can see that there was a wedge a couple of weeks ago that we were discussing and watching, and we were suspecting that if we break out above that wedge, it's going to be for a good run to the upside. If we break below that, it was going to be for a pullback. Eventually, the market chose to break out of that wedge, as you can see here, and since then the market has gone on to record new highs. So that wedge was very instrumental in giving us an idea of what the market was trying to do. Now we look at the market coming back to a level of potential resistance. As you can see, off this high and this pullback, there was a break there on the RSI. So this break point here on the RSI led to the price making a high and a pullback. We draw a simple straight line from there like that, and you can see that since then, every time we move below that line, the market corrects. Here there was a correction after that high. We came here, we show uniform resistance just like the Dow, short-term high, and we are looking at the market doing the same thing right now here, which is a short-term high, indicating that more than likely this is also a reason to be looking for the market to go lower. So if that's the case, then we should all be expecting some type of a pullback. S&P 500 hourly, we can see that we made a higher high on the hourly there, but yet we made a lower low on the hourly RSI. At negative divergence could be the reason why we are starting to come off the high, and we need to hold this line of support, otherwise we start trending lower. In fact, if you look at this, we did break below that line or that wedge as of late Friday session, so more than likely this is the beginning of a pullback. The market is going to have to come back and test this green line where it's been finding support. So until we get there, I think we are setting up, in my opinion, for a market to go lower. And again, why? Because this line of support has been broken now, right there. And I guess I can show you this in another way, which is using the RSI of 26 period. So instead of 14, I'm using 26, and we take a simple straight line. We see that slight break there on Friday, the slightest of breaks right there. Not as decisive, but the more it breaks, the more it continues trading underneath that red line, the more this is a break. But if it can bounce on the red line now that it's trading around it, maybe there's some hope. We'll see how that develops, but the key here is we made higher highs in price. RSI did not make higher highs. If we take a look at the S&P 500 30-minute chart, we can see that if the market is to go down, it needs to break this line to begin with. It hasn't done so, so there's some hope. But if this line can hold, then it's good. We can also see that it's testing the prior most recent entry as discussed on the Nasdaq. So there was this nice move here that began this nice entry here in the market. We're talking about on a short-term basis, and if you draw a simple line from that entry level, you can see that the market has used the same line for a bounce there, and we are back in that general territory. So I think the market is setting up, either it's going to hold that line, including this line here, and the fact that the market did close exactly on those two lines is interesting. If it can hold, that's good. If it breaks, then we are starting to see the signs of the first crack in the market. Right now, the market did end the week a little bit down, but it's not broken by any means. Okay, let's take a look at the Canadian market, and we continue showing potential for either breakout or resistance, and it's a simple line, this line here. As you can see, it gave us interesting data points. It was resistance here for a move low on the weekly, resistance here for a move low on the weekly. Eventually we break out above that line for a nice entry there. We use the same line as support, which was this lows there. We come here and we break below that line, which is off that level. We show resistance on the same line here for a quick couple of weeks down, and so we are back in that general area. We can see clearly that above that line the market should be poised to go higher, and also below that line we should be looking at a market to be trading lower. So the fact that we closed exactly on the line suggests that the market is trying to decide whether it wants to go higher or whether it wants to go lower. Now if we take a look at the daily for the Canadian market, we can see that if we take a look at the break point of the highs there, the RSI broke down here. We draw a simple line of that break point, the red line, and we can see since then this was resistance. It gave us a short-term high there, and now we seem to be trying to decide whether we want to stay above the red line or not. My thinking is if this becomes resistance, then we are due for a pullback. But if the market can trade above that red line and trade above that line, maybe the market eventually does clear this short-term resistance level. So looking at this, it's hard to tell because the market is back at the line or to the line, and eventually it's going to decide whether it wants to be above that for a bullish run or whether it's going to be showing resistance for a pullback. The best way to show you this indecision is take a look at the hourly. And on the hourly, you can see very clearly that the market is wedging on the daily, on the hourly RSI. So this hourly action here, eventually we are going to have to either break out above that line for a bullish move, or we're going to break down below that wedge for a bearish move. Okay, let's take a look at Apple as a bellwether stock. We can see slightly down for the week, but not broken. RSI continues to be trading above 69.1. Sign of strength. We know that on the monthly, RSI continues to look good because the RSI continues to be above 69.1, which is great. Take a look at the daily for Apple. We can see, yes, it is slightly down, but for it to be down significantly, it needs to be down this line. Let me show you this line around the 50, which corresponds with this price move. So ever since the stock jumped above this level here, it's had a nice run around 110, which was also that RSI move there. Draw a simple straight line from there, and you can see that the market did hold that line once with uniform action, which was this low somewhere there. So if the market can eventually come back to the 50 and show support, the indication would be that the Apple is going to be making new highs. So it's, yes, it's pulling back, but is it broken? No, not by any means. If we take a look at Apple from an hourly chart, now going a little bit short term, we can see that the most recent successful move began here, which launched this nice move higher to new all-time highs. And so we can see that that RSI move was during this RSI jump above this level here. On hindsight, we know that's a fact, that it began here, which corresponds, this breakout corresponds with that perfect entry on hindsight. So draw a simple straight line like that. You can see again here on the hourly, the market did come close to that level and hold, which was this nice entry point. Recently we came here and held, which was this nice entry point. So as long as Apple is trading above that line and bouncing on the line, then it continues to be going through its paces up and down, but eventually looks like it's going to be moving higher as long as it's holding the weekly, the monthly, and the daily charts together as it is doing right now. Let's take a look here in conclusion, take a look at markets. And we can see that on the monthly chart, we continue being very strong on all markets. Nasdaq is above that previous monthly closing high. RSI is above 69.10. That's very strong. Gotta be careful there, trying to find reason to go short the market. S&P 500 looks great. You can see that the RSI is on the monthly is above 69.1. The monthly breakout continues to be still in play. So that's very strong. Gotta respect that. You can see that the RSI has been generally above 69.1 since February, March of 2013. And so for about 2 years, it's been trading above, generally above 69.10, which might explain why it's been on a very strong move upward. Take a look lastly at the Dow. And we see that the Dow is also showing monthly price breakout, absolute strong indication there of momentum. The RSI is just about above 69.10. So as long as all markets are trading above 69.10, you have to respect the potential for upside. Now, as we go into a new month, we have to be aware that, let's say, if the market does not hold this prior monthly closing high, so let's say, for example, we have to be sensitive to the idea that in the new month, if we break below that level there, if the RSI moves below 69.10 for the Dow after closing above it, we have to be aware the market could be due for a pullback. As an example, I'll give you this period here where the Dow moved below 69.10, which indicates this drop on a monthly chart. So everything is going to depend on how we're going to be trading in relation to this number on the monthly charts for the S&P 500, Dow, and for the Nasdaq. I'm going to have part 2 ready for subscribers sometime before Sunday. Eric Mwathe, good luck, peace, and blessings.